Frank Aquila is Sullivan and Cromwell's senior M&A partner and is with me here to talk about this industry, which is ever evolving. And I guess let's start with regulatory scrutiny. Like, where do regulations stand? What do we see the regulators looking at right now?
Regulators are certainly more activists than they were a generation ago, but this administration is seemingly more open to corporate consolidations than the previous administration. And so I think that that's being viewed as a bright light. And I think that's part of the reason we're seeing a pickup in activity. The concern, of course, is that the biggest transactions have to be approved in multiple jurisdictions, the EU, the UK, Japan, elsewhere, depending on where the business is. And their scrutiny is certainly higher than it has been. So I think that there's cautious optimism that deals that maybe wouldn't have gotten through last year will go through in this administration.
Okay. And due diligence, how has that evolved?
So, I remember when I was starting out, you would troop off to Cleveland or, Chicago or Boston or wherever the company was located, and you would get access to a room, the data room, and there'd be boxes and boxes of material, and you'd come with your team, and you'd spend 2, 3, 5 days going through that material. Today, everything is virtual. Everything is, accessible online. You do it from your office. You ask for certain documents to be added. They add them online. And what's happening, now is that through AI and other tools, you're getting synopses of documents. You're being able to pick up the red flags so that you can really focus on the key documents, because a lot of what you get in the data room, the electronic data room, is not all that relevant. Something you have to look at, but it's not a priority. So due diligence is becoming more intense, but it's becoming more manageable.
Mm. And let's talk about deal volume and deal value. What's the difference and how are those two comparing right now?
Okay, so deal value is you take all the deals that have been done from January 1 to date, and at this point, I think it's about 3 trillion globally. Deal volume is the total number of transactions, and you know when there's an M&A boom, you see a significant uptick in M&A volume. So that the dollar value of all the deals. 2021 is the high watermark with roughly 5 billion in deal volume. The first half of the year was fairly slow, but then we started to see all of these big mega deals happen. And mega deals, 5 billion or more. And that's what's really carrying the M&A market today. So deal volume, the number of transactions is lower, but the average size of the deal and the number of mega deals is way up.
Okay. And what about the macro environment? We've dealt with inflation that's still kind of lingering. We've had tariffs. And how does that impact what you do?
Well, certainly the early part of the year, which we had anticipated being a very robust period for M&A, was slow because there was a lot of uncertainty. I would argue that with tariffs and other things, that there's still a lot of uncertainty. But what boards and managements have determined is that they are going to move forward with strategically important transactions and basically make the assumption, if there's a high tariff in my sector, a low tariff in my sector, this still makes sense. And they're going back to basics. Essentially, doing deals that are going to not only grow the bottom line by cutting expenses, but also are going to be combinations that grow the top line. And a lot of that's happening, particularly in the tech sector and in the financial institution sector. With respect to tech, what we're seeing is a lot of transactions being done either directly because of the relationship of that company to AI, or because AI is going to be disruptive to the sector, and therefore companies need to get together to have the resources to invest in AI.
Okay. And well, you mentioned AI tech, and we've seen a lot of deals, especially just recently. Is that still the hottest sector, would you say, for M&A right now?
I think it is the hottest sector for M&A, and to some extent, it's a technology that is changing a lot of things in American society, but it's certainly changing M&A. And let me give you an example. Companies that are startups will actually move through the life cycle much more quickly and become commercially viable and therefore potential M&A candidates, M&A targets, because AI allows them to move more quickly. AI also allows larger companies to be able to take massive data sets and say, okay, these are the three companies we want to target. Or of the five companies on our list, this is our preferred target. This is the secondary target. That's the tertiary target. So AI is being used by M&A professionals and companies to figure out who should be the ideal candidate to acquire.
Interesting.
And then I was mentioning due diligence. AI is having an influence on that as well. And then in terms of doing filings and things, AI helps you to move that process along more quickly. So AI is having a huge impact. And as I said, the sector itself is rapidly changing and evolving, and you're seeing a lot of strategic partnerships there. So lots and lots of activity.
What are you seeing in consumer products and retail?
So consumer products and retail, have always been, challenging because they have lower margins. And that has certainly been the case. I think there's some reprieve now, or potential for reprieve, as interest rates start coming down. They will be in a better position. But with so many dollars chasing, tech and some of the healthcare and things like that, uh, they're always going to be challenged in terms of capital. And that will lead to combinations. It will lead to restructurings. And, I think also, and this goes to AI and just technology in general, you know, uh, you had Coca-Cola for 100 years. Now you have all sorts of versions of Coca-Cola. And I use that as an example, not necessarily being influenced by AI, but, you know, people's expectations are that they're going to be continuously seeing new products and new flavors in the food sector, and new fashion. And so companies can no longer just simply rely on the fact that, well, I've got a great brand name and people have been using my product for 25 years.
Yeah.
They're going to use them for the next 25 years, because markets are getting disrupted all the time.
Yeah.
And that leads to acquisitions. And you see companies going out and acquiring very small companies, which they then sort of ride into relatively big products.
Yeah, no, interesting. Kind of some of these like protein bars or something like that. It
Exactly.
has a cult following,
Right.
that, a big food will acquire that. I've seen a lot of that.
Yeah. And then, you see that in the soft drink sector.
Yeah.
Pepsi did that earlier this year. And I think what you then see is they'll acquire the company, and then they'll take that brand, which has a certain cachet of being, small, independent startup, and then line extend it to other products.
Mm.
So, there's great value of a successful startup brand in the hands of a major
And
company.
the consumer probably doesn't always know that it's owned by a big food company either. They still think it's a small startup. geographically, are you seeing more activity in one part of the world?
Certainly, North America is historically has been where deals have been focused, but you're seeing more activity, certainly of the mega deals here in the U.S. than elsewhere. And putting politics aside, people may be critical of this or that with the U.S., but the U.S. economy is by far the strongest, and for the foreseeable future, it will be.
Yeah.
And therefore, investors from around the world want to fund, their investments here. They want to grow here, and I think you're going to see some companies potentially using acquisitions to, in effect, move more of their business to the United States, since we have higher growth than anybody else. May not be nominally in terms of percentage the highest growth, but when you start with the highest base and you grow roughly at 3% a year, you compound that for a while, you see a tremendous amount of potential.
Sure. And what about within M&A and talent within that? Are you seeing acquisitions in that area as well?
Certainly, I think you're seeing more movement of, individuals than you ever did before, whether it be in investment banking, consulting, and certainly in the legal profession. There are a lot of combinations in the legal sector, but they tend to be sort of more, mid-level firms, and we have not seen any of the really large firms. Maybe you could say Allen and Overy and Sherman and Sterling getting together was one. But by and large, you're seeing it being sort of below the top 25 firms where the consolidation is happening.
So, how do you see the rest of 2025 and 2026? Any trends?
So I think that we're seeing an acceleration of M&A activity. I think that as more larger companies do deals, it gives confidence to other large companies, other boards, middle market companies to go out and make the acquisition they've been holding off on. So I think that the momentum is going to continue. I think it's going to be, it already is a busy fourth quarter. I don't like to predict more than 6 months in advance because inevitably you're always wrong. But I do think that that it will carry over into the first quarter of 2026. And I have to believe, other than, another pandemic, market crash, huge
Black
tariffs,
swan type thing. Yeah.
that we're going to see a very busy 2026. Yeah.
Okay. Frank, thank you so much. Always great to get your
Great to
insights.
see you.
Yeah.
Thank you.